following is an update and technical analysis on the equity markets here off the daily interval, starting off with the U.S. 500 S&P 500 futures. And wow, what headlines that have rocked the equity markets, where we had yesterday the biggest blowout in corporate earnings history when NVIDIA not only smashed estimates, but projected Q3 results that were above even the highest projected number. And then immediately today sold off right after the pre-market. It still has an insane PE ratio of 200, 220, 230x, which currently shows the significance of all the QE money that is just sloshing around in the system. And again, there are only, just as of now, as far as the determination of the market breadth, where it's just a handful of stocks that are holding up the entire market, like the Greek figure statue holding up the entire planet Earth, where we have the Jackson Hole tomorrow. Speech by Powell after an entire year now of Powell pounding the table that pain was coming. A very significant price support zone, and I believe we've reached critical junctures and inflection points really across the broad markets. And I'll deep dive right into the S&P 500 here, where we had additionally the primary parabolic uptrend line that was cracked, completely taken out here. Right off this key inflection point. And again, it is so far right off that sell signal, starting to end in a disaster, where that right off that first initial point has been good for darn near 5% move to the downside in a highly diversified top 500 companies here in the world. Taking away this parabolic uptrend line, I've added some of these new key functioning levels, where we have a major primary reactionary uptrend line here off the 2022 October reactionary lows, and I believe that will have a significant turning point if and when we come across that juncture. Whereas we put in a nice clean divergent high, we had negative and bearish divergences really constructed amongst all three technical momentum indicators here, and that was a prolonged move, big move to the downside, catching the 43.2990 price support, which correlates with the 50% fibs retracement. I had mentioned that as a significant turning point as well. You had the 100-day moving average hovering in and down below, especially if you're an active and or quick day trader. Move to the upside for any dip buyers. That was good for a 3% rally to the upside. And again, once a highly diversified, significant turning point, where we got rejected right amongst, I believe it was 44.40, where I had that key resistance zone, 44.90, I believe. Whereas I've added this 44.45.70 price resistance, and we were rejected impulsively right off that key resistance level today, coinciding with the 50-day moving average. Call it a dual line of resistance. I've added this new minor reactionary uptrend line that has a significant reaction right across that sphere, and I believe this to be a very key turning point, which will coincide with the 43.6320 price support here. I'll call it a dual line of support, and that'll be a significant turning point, depending on where bull traders, long traders, they want to begin that scaling in process for the risk reward ratio, move to the upside in a long swing trade move on a potential minor, call it a minor reactionary downtrend line, where they want to break out amongst this key inflection point and re-challenge the 44, 40, 45-ish price resistance, called that dual line of resistance, for a prolonged move to the upside on a re-challenge of the 786 fibs retracement, coinciding with the 44.97 price resistance. And they want to significantly retest that level, re-challenge that level for a move up above. Whereas short sellers, bear traders, they want to see a final breakdown in this minor uptrend line. Nice, clean daily candle close below, where Powell just issues a complete rug pull, and even potentially taking out at the same time the 50% fibs retracement, where that previous on an undercut of the reactionary low there, that would spell an additional, I would call a minor sell signal, an additional sell signal on a prolonged move right down to the 382 fibs retracement on a retest, and then ultimately the 236 fibs retracement, call it 41.81 price support there, which I believe, especially if we get sort of a move, a bounce off that move, maybe an additional, we'll have a redrawn out primary reactionary, could be a major primary reactionary high down trend line, and then ultimately a retest of the 41.84 236 fibs retracement and the 200-day moving average, and the renewed here primary big reactionary uptrend line that I've added, which would be a very significant turning point, called a triple line of inflection points on a retest, where bull traders, long traders would need to step in aggressively. So going deep into the October, if not November, month of November there, where they would need to re-challenge that key inflection point. And again, short sellers, bear traders want to see a complete breakdown. A long way to go, speaking in the near term. But again, these are just some new key inflection points to watch. Taking you out to the Nasdaq 100 futures based upon the CME exchanged here off the daily interval. And again, I've added, and I had completely stressed how big of a turning point this primary reactionary downtrend line off the all-time highs off of 2021 had a very vast amount of reactionary highs and reactionary lows right across that entire spectrum, coinciding with the 50-day moving average. And I had mentioned in that previous video, coinciding with this primary reactionary uptrend line off the January 2023 reactionary lows, call it a duo with the 50-day moving average, a triple line of inflection points, which would offer an objective, great short trade entry. And that entire trade with no wick right up above. That was good for a almost call it a 3% crash move to the downside. And we are significantly holding on for dear life here off the 14,871.48 price support. And we're slightly trading below it as of now, where bear traders want to see a retest of this primary reactionary low. I've added this new 14,618.54 price support and call it minor price support level there. And they want to really take that level out and on a complete challenge of the 618 fibs retracement, call it 14 for 39.97 price support there. But that is just a very bearish engulfing looking pattern, candlestick pattern. Very extremely bearish in my opinion. Just puts technical damage again amongst some of the technical dimensions of the entire indice. Whereas you have the zero line thresholds being plunged in below, where the moving average convergence has sunken down below that key inflection point, as well as the oscillator. And just a very bearish signal. Just the impulsive rejection off that level highly signified this triple line of inflection point that I had been hyping and harping about for weeks on end there. And talk about a great risk reward ratio to move to the downside that very well could have called the near term top. Whereas you have a ton of companies reporting earnings, blowout earnings, and they are just crashing in the pre-market after they're above. Again, just a fundamentally huge micro and macro horrible data across the board we've been receiving, and just been printing up above. And underneath the hood, it's looking pretty grim there. Where bull traders, long traders, again, they want to put in a potential double bottom here and rechallenging of that triple line of inflection points. Dual now with the 50-day moving average hovering up above. But again, that primary downtrend line needs to be respected historically on all cylinders there. That'll be a big inflection point to watch, especially if long traders and or bull traders, depending on how some of the technical momentum indicators will look on the hourly intervals here. Again, additional key inflection points to defend really at all costs if and when we go to rechallenge that move right back down there. And again, we are just trading slightly below this resistance level. Do not underestimate if Powell just throws a bunch of doves in the room as well. Anything's possible. You just trade off the risk reward ratio, the setups of the charts, copy the charts, and follow some of these key levels to hone in on some of your trades that you're planning out with stop loss orders and applying the risk reward arena in your favor. Taking you out to the US Tech 100 futures here off the daily interval, and I've added and really adjusted a lot of this, some of these new renewed key inflection points. We have this primary reactionary uptrend line here off the January 2023 reactionary lows, and I believe that this is a very significant price support level, which coincides with the 14,677.70 price support, additional price support. Again, nice clean reaction right amongst that space, and call it a dual line of support there. And I believe algorithms, machines, computers, traders professional institutions will more than likely double down here, especially if they're a long trader, bull trader, to defend this uptrend line and keep the trend intact to the upside really at all costs there. Where again, nice key inflection points where I believe a big turning point if Powell completely pulls the rug up underneath everyone's feet there, puts in a nice daily sell signal below, coinciding with additional significant price support levels. Call it 14,558.40 price support, which is the near-term reactionary low amongst that space. And a move like that would only signify just a major sell signal, in my opinion, where you could have an additional backtest scenario, additionally like the CME exchange there, and which again would provide a beautiful risk-reward ratio move to the downside on a target next to that 14,297.70 price support there. And then if Powell were to unleash some doves there, bull traders, long traders, they want to defend this key inflection point. I've added this new minor reactionary downtrend line here off the July reactionary highs there. Additionally, with the 15,281.60 price resistance up above, that is significant price support, price resistance level with plenty of reaction right across that board. And I believe that is a big turning point, especially after we got rejected right there, really to the button. If you're an active and or day trader, just that key inflection point right off that pivot point was good for a 3% crash, which coincided with that move right up above. So that's why I love watching that CMA exchange. Just if you have major key pivotal inflection points on both ends of that spectrum in different dimensions, just increases the odds for a bigger, much larger drop move to the downside, and vice versa if you're playing the long trade, bull trade setup. Taking you to the 60-minute interval here of the US Tech 100 futures, and really to the button, especially if you're an active and or day trader. The 14,970.50 price support was bid right amongst that inflection point. The entire trade was good for just 0.3% to move to the upside, but it had just a minimal reaction there. And again, that is still price support here, and nothing too major now. But again, if we have that pump right up to the upside overnight, heading into the Asia Open, coinciding with the 14,872.40 price resistance up above, these are just key inflection points to watch, where the tan colored price support and resistance levels are synchronized with the daily interval. So just an additional inflection point to watch. We have a primary reactionary, call it minor reactionary downtrend line here as well, right off the end of July. The end of July reactionary highs there. And if we were to have a big market move to the upside, that would provide a nice, meaningful reactionary risk-reward ratio, short trade setup move to the downside, coinciding with the 15,281.60 price resistance and the primary downtrend line for an additional bigger move to the upside, where long traders, they need to step in pretty imperatively here. If not, additionally, the 14,677 and the 14,688 hourly price support here, I believe, again, is the biggest inflection point, because the 14,677 price support will coincide right here. Put this color coded on with color coding it red there, and that is the turning point of this primary reactionary uptrend line. That is the significance of that price support level. And if we take that out, again, that's an additional sell signal, in my opinion, and that'll be right along this line here, right there amongst that key inflection point. And if we sort of just potentially bear flag here, that would be a big major move to the downside, where you could actually measure the top of that flagpole there, which was good for a 3.7% crash. And if we have some sort of scenario there, 3.7% crash would net you almost perfectly down to the 14,330 price support there. That would be the bear flag continuation pattern really to the button there, which will coincide with the 14,297 price support off the daily interval there. That would be a perfect bear flag measurement where you have that first initial flagpole followed by your flag of consolidation, and then a big move to the downside to construct and establish the finishings of that bear flag continuation pattern. Taking you out to the US 2000 Russell futures here off the daily interval, I had mentioned this primary reactionary uptrend line and the 236 fibs retracement. Call it a dual line of support, price support, and really to the button, especially if you're an active and or quick day trader. That initial right move was good for almost 2% in a single day, with a continuous reactionary continuation rally of 2.5% there, just coming shy of that other additional price resistance. But again, this is a minor reactionary, now completely validated with that additional reactionary low that completely filed out there. And I believe that is going to be a very significant turning point with the 1819 price support right below the 236 fibs retracement. And again, I have been hyping and harping up that primary reactionary price support level here with just a multitude of reaction right across the board. And I believe that I believe that is the floodgates will open there if we put in a solid daily candle close below that key inflection point on a bigger crash move down to the 1726 price support. Bull traders, long traders, they need to step in now, set some stops below with that scale and in process, and then gun right back up to that range of the 1899.30 price resistance. And that is even bigger resistance, call it multi-year price resistance. And once we cracked right through it, that signaled how pivotal and how imperative that inflection point was when we put in that solid daily, just all the stops that went off on a candlestick close of that magnitude, just help validate how imperative that key inflection point was. So these are your moves to follow up on, re-challenge that tough resistance up there above, and then ultimately the 382 fibs retracement level of the 1954 price resistance. And then again, even bigger resistance up above is the concealed and hidden primary reactionary downtrend line with just a multitude of reactionary highs right across that board, where bull traders would need to hone in on something like that. But again, this gives me a bear flag continuous fill. When you look at the consolidation phase, anything's possible again with the Jackson Hole speech, but that's going to be a very significant turning point where that potential bear flag there, 8.62% drop, if we measure out maybe to the top of that flag on an 8.62% drop, almost immediately right back down to that 1726 price support on a perfectly measured bear flag continuation pattern, right, big crash move to the downside. So again, we'll see how that turns out. taking you out to the US 2000 Russell 60-minute time interval here. And we had a nice divergent low, positive divergences amongst all three technical indicators, which was the technical induced catalyst for a move right back up. I've added this primary reactionary downtrend line. I believe it has a significant reaction right across the board at the last two trading sessions there, with a minor reactionary uptrend line that has been broken on an hourly candle close below. We ended up back testing it. We have just been consolidating further here and trading amongst the 1847.30 price support level there. And again, that would really spell in a big bear move right back down and a rechallenging of the 1819 daily interval price support there, if and when we get there. As far as the bull case scenario, if you want to keep these positive and or bullish divergences intact, I believe that could spell a potential short trap, a bear trap here, if we just extend these positive divergences, maybe even up to that 1819 price support, if they can keep intact there. Maybe a move like that, shakeout move, and then we'll have the ultimate extension of these positive divergences. And if we take that level out, if we take out the 18, 19, 10, depending on how the posture looks here in the technical momentum indicator space, a breakdown move below that could ultimately just burn out these positive divergences. And then again, you'll have a very fast move crash to the downside when you ultimately burn out these positive divergences in the near term.